How you doing? Today is Tuesday, October the 8th, 2024. Just making this video here. I'm doing a series on seller financing and real estate notes, and I'm focusing on the seller of the property. So I'm making this video to kind of give reasons why a seller who has a property, whether it be an investment property or your primary residence, on why you would want to consider selling the property with seller financing. And this is opposed to just putting your property on the market and looking for a traditional buyer who is getting qualified for a mortgage. So I just want to kind of go through a few things here really quickly, not going to be too long. I'm going to define what seller financing is. Maybe somebody is watching this for the first time and doesn't know what seller financing is. And then I'm going to go through some reasons why you would want to consider seller financing. And I'm going to do a part two to this and go over some scenarios on how it breaks down in terms of the dollar figures and different scenarios, about three different scenarios on how you can um, how the seller gets their money out of the property once they do sell it with seller financing. So, what is seller financing? Seller financing is when when a person who owns a property sells it on terms to a buyer. So instead of the buyer going down to a Bank of America, Wells Fargo, any type of lending institution and obtaining a mortgage, the seller of the property extends terms to them for that buyer to pay off that property over time. Whatever those terms are, the seller and the buyer have to agree. And then we can kind of get into that on another training on the best practices for that. But essentially, with seller financing, is that the seller of the property is essentially becoming the bank, just like a bank would. And so you can do that on a property that is either a primary residence or, once again, it could be some type of investment property. You have the ability to do this, and you can still sell or finance a property even if you do have a mortgage on the property. You can still offer seller financing. Uh, Even there may be a small balance or, a high balance loan already on the property. You can still create seller financing for another buyer and then be able to kind of collect the difference between what still needs to be paid on that first lien and then this second lien that you create second, or it could be third or fourth position, whatever the case may be, depending on your situation with your property. But you can create this other lien and then still create and still collect the difference between what has to get paid to the lien that's already on the property and the one that you create for the buyer. So just wanted to kind of do a quick overview on that so you get an understanding of what we're talking about. So when it comes to seller financing, you are in most instances going to transfer the deed of the property or ownership of the property to the buyer. So you are no longer technically the owner of the property in most situations. There are some um, in some areas and some ways to do this where you as the seller do not have to transfer the ownership of the property in terms of your deed until the whatever balance is paid off, whatever you've created for a buyer gets paid off. That's more of what we call a contract for deed type situation. There's a couple of different names for it. In a couple of states, these are more popular. But technically, the person that creates this note or creates this contract for deed is essentially saying, okay, you can't take, as the buyer, you can't take ownership of this particular property until I receive all the payments, until the terms of our agreement are satisfied. So that's one way that you can do this. But a lot of times what happens is that in order to um, you create the scenario where that deed does transfer to that particular buyer, and then what they do is they pledge back the house, the collateral to you in the form of a mortgage a lot of times. And that is a security agreement. Now, there are different types of security agreements, and we can talk about that at another time as well. But most of the time, people understand mortgage. And so when you transfer that deed, what comes back to you from that buyer is they're saying, okay, if I don't fulfill the terms of the agreement that you and I made, you have the right to then go ahead and take this property back. So that is what protects you as the person that is doing the seller financing um, and creating financing for this particular borrower. Okay. Um, so why would you want to seller finance? There's pretty much like two main reasons, and let me tell you who shouldn't seller finance. If you have a property and you need all of the proceeds from the sale of your property, whatever that may be, it could be $100,000, it could be $1 million, it could be $500,000, whatever it is. If you need all of that money to then go and do something with it, whether it's buy another property, whether it's pay off debt, whether it's go on a dream vacation, whatever that reason is that you need all of the money that you're going to get from that sale to then go ahead and do something else, you do not want to do seller financing. This is not for you. This would not be an option for you. But in any other instance, if you don't need all of the money at the time that you sell the house to then go do something, you should consider, weigh the pros and the cons of selling with seller financing. And the two main reasons why people seller finance is because of property challenges or an investment strategy. So we're gonna kind of go through and break down those two things and walk through those main two reasons of why people want to use seller financing. So if you're somebody that may have a property, maybe you inherited it, you've lived in it a long time, maybe it had some wear and tear, some things like that, and you may not necessarily want to, go and fix certain things on a property, fix up certain things, but and you don't want to take necessarily a big discount for your property because of those things that need to be fixed. Seller financing is a way you want to consider to sell your property to be able to to not have to go ahead and do all those repairs and still sell the property at a price that you want. Um, and then again, as an investment strategy. And we'll get into that as well. So a property that's difficult to finance a lot of times could be something that has a lot of acreage, could be a mobile home and acreage. Sometimes, again, we inherit these properties. We have people that live maybe in the South or in the rural areas, and then, a piece of land or something like that gets transferred to you, and you don't necessarily want to go live on that particular property or something like that, but you have the ability to sell something like that with seller financing because it's not a typical piece of property where somebody just goes to a bank and they get a loan on. Could be a big piece of land that's acres and acres of land, and you just can't walk down to any financial institution and get a loan for something like that. So something that may be difficult to finance could be a mixed use property. Maybe has some type of function outside of a typical home. Could be a business with apartments or something like that, but it's something unique where everybody just can't go down to the bank and get financing for this particular property. So that's one case that you want to consider seller financing. Properties that are under $100,000. Again, in that scenario, maybe there's a property somewhere in a rural area that is in your family. Somebody owned it for a long time, but the prices in those areas, there's a lot of areas throughout the country where homes are not worth more than $100,000. So if you have something that is valued at under $100,000, a lot of times buyers for those particular properties cannot get financing. Usually the bare minimum is somewhere about $100 or $125,000 for most lenders, that they do not write loans for if the property value is at or under those amounts. It just doesn't make sense for them. The cost to do that loan and everything like that. It costs them just as much to write a loan on a $500,000 house. So they rather go put those resources towards finding something like that as opposed to what it costs to write the loan on a lesser value property. So if you're in that situation, or if you know somebody in the family that, may own a piece of property in one of these, again, rural areas or smaller towns and things of that nature, this may be a good option for you to think about seller financing that particular property if you want to sell it, because you're not able for somebody to just go get a loan and be able to cash you out of the property. Um, and we talked about needing repairs already. So, again, obviously if you put some work in the house, you probably can get top dollar for it, but you know, maybe that's just not something you want to do. Maybe it's something that you can't do. You can't just take, 10 or $15,000 to go and then fix up the house the way that you wanted to, or more money. So we can, sell or finance it, as is, and do it at a good price, and then let that person who's then going in the property to put what they call their sweat equity into it, let them fix it up over the course of time because they're going to be living there. Um, another reason, property has been sitting on the market for a long time. And this is, probably, most people that watch this will probably be in this category. Maybe you've had a property on the market. I know we're coming out of a time where properties were sitting on the house less than 30 days, 15 days, something like that at most. And then they were selling, and then they were selling for top price. They were selling for more than what people were asking. But now the market is kind of shifting, and I'm starting to see when I look at different properties, they're starting to sit on the market, 45, 60 days, maybe a little bit longer. So it all depends on where you are and where you're watching this, what's going on in your market. You may be in a market where things are still selling, very quickly, but there are some markets, and more markets, you're starting to see properties sit on the market a little bit longer. So if you have a property that's maybe longer than 60 days, you're probably not going to get the price that you're looking for. When it's been on the market that long, you probably are going to have to take some either price reduction or lower the price. And then obviously the more you get like over 90 days and further, the more likely, either a price cut or having to accept, a lower offer are possible. But, if you are in that situation and don't necessarily want to drop the price, or want to necessarily accept, a significantly lower offer or lower offers than what you thought, you want to consider offering seller financing. And you can do that with a real estate agent. The real estate agent can do that. Now, the real estate agent that you have may not be as familiar with it, but it's still a possibility. You guys can talk about it, and say, I think I might want to start to offer that, because now you open up the property to more potential buyers when you do it this way. Or when you offer seller financing, you're tapping into the people who couldn't necessarily go down and get a mortgage at a bank, but they still have a good down payment. They still have a strong income coming in, and they fit where they could be a buyer. Or even in a situation where you've had a buyer who was trying to get qualified. Right now, we're in a time where interest rates are jumping around. They were high, they came back down, and then recently they've been inching back up. So when that happens, a lot of times you could have at the start of a transaction, somebody be qualified at a certain interest rate, but then when it moves around, it shifts. They haven't got locked into their rate just yet. Now, if the uh the rate goes back up, an extra 100, $200 on their payment doesn't get them qualified through the bank. But, we're able to kind of help in that situation as well if we can create this financing for that particular buyer who had an issue with that particular property that they were looking at. We could, get them qualified, so to, and get them into that property by using seller financing. So, um, these are the reasons why you want to consider. So if you fall into anything like this, you want to, at least look into this option and see, how everything comes together, how it's going to work for you. And, see if that is a better option than, like I said, lowering the price, having to take it off the market, waiting another, 6 months or the next buying season or something like that. And we just don't know, what's going to happen. Obviously real estate is it runs in cycles, and we've been going up like this for a while. So it is due to make a turn at some point. So the last reason is if the property is distressed. If you're in some type of foreclosure, you're behind, your life changed, and you have to, do something with this particular property. Seller financing is a way that you can kind of move quickly on things if you offer it this way. Somebody can come in, and if you offer them the seller financing, they could take care of some of the back payments that you have or missed payments or something like that. So it works a lot of times when you do have some form of distress, whether it be in your life or with the property itself. Seller financing, is a way that you can solve that particular issue on the property. So the second part that we're going to talk about is investment strategy. Using seller financing as an investment strategy. You can convert rental income into interest income. So those people that have been renting maybe a single family home somewhere, maybe you own property in another state, you own a multifamily in another state or where you live, and you've been counting on that rental income, but maybe you just don't want to deal with being a landlord anymore. We're starting to see more and more people get a little bit more frustrated, a little bit tired of, dealing with tenants and the toilets and the repairs and doing things of that nature. You don't have to do that when you use seller financing. You sell that property or you transfer that property to somebody on seller financing, but you can still collect that monthly income. And then a lot of times you're going to collect more of monthly income because you do not have the expenses on the property. You don't have to pay the water anymore. You don't have to pay the taxes. When you sell or finance this property to somebody, everything that deals with that property is on them. You think about yourself. If you have an issue with um, some type of repair, something happens in the house, you don't call Bank of America, you don't call Wells Fargo, you don't call your lending institution and say, hey, I need, somebody to come over here and fix this. No, it's on you. And that's the same way because you're stepping into being a bank like a Wells Fargo or Bank of America would be. So it's going to be on that homeowner to take care of all those expenses. So that's why the cash flow a lot of times increases. And again, whether you have a multifamily or a single family, when you do this, you'll start to see that, most likely when you run the numbers, you're going to get more cash flow when you sell or finance it as opposed to renting it out. And you don't have, like I said, that responsibility. So you can kind of convert that rental income into interest income, which, you're gaining interest over year or over time, the more that you own the property. Hopefully it's, going up in value and things of that nature as well. So, you can maximize the selling price. When we talk about investment strategy, if you have a house that's, I'm just using random numbers, but let's say it's worth $100,000. A lot of times you can sell it for about 10% more than that if the property is valued at $100,000, because seller financing is like an amenity. It's like having a third bathroom or that extra half bathroom in a house, or having that fireplace in a house. It's an amenity when you are offering seller financing, because you're extending something to more people and people out there who can't just go down to a bank like I mentioned earlier. So this is considered an amenity on the property. So because of that, you can charge or you can sell this property at a top dollar, and in a lot of cases you can sell it slightly over what the market value is, because you are extending these terms to someone. So you might want to think about that as well. Put a little bit extra money in your pocket over time because you're offering this. You increase your buyer pool. We kind of talked about that a little bit earlier. But if you look at stats and statistics, if you do your own research, obviously, you're probably not going to just take what I say as the truth. If you look and see what the numbers are on people who get declined for mortgages, it's steadily somewhere around like 30 to 40%. And I'm talking about you know, they go down, they fill out the application, and for whatever reason they get declined. That happens a lot of times because, they have to work on this. They have to go and do something with their credit, or, pay something off. And it may take them 6 months, it may take them another year to do that. But when you offer seller financing, you don't necessarily keep them, you don't necessarily have to put them through everything that a traditional bank does. And that doesn't mean that we're just putting anyone in these properties. That's not what we're saying, because that wouldn't be good, just to try and put anyone in your property just because they have a certain amount of money. No, we make sure that they can go on the property, they can make the payment. They're not, their debt to income ratio is good. We get them qualified just like a bank would, but we don't look at everything as stringent as a bank does. So you get, more people, and the more eyeballs that you get on your property creates more competition. And, then again, that's again why you can sell that property at a premium, because you're getting more interest on it a lot of times as well. So, that's another good thing of with seller financing. Um, a lot of people get denied just because, their credit score may not be at a certain level. Um, um, the way that they make money now, we're living in a different type of society where people earn money, a lot of different ways. They don't just work 9 to 5 jobs. They have other, side hustles and things of that nature, that they're making money. But a lot of times a bank will not, look at that the same way that we could look at it, and feel confident about someone being able to make the payment. So, also, you can talk about when it comes to installment sales in terms of the tax benefits. Again, we're talking about investment here. So, I would, if you're thinking about this or possibly consider it, whoever does your taxes or your accountant, somebody that handles your financial, your financial business, you could talk to them about the installment sale. IRS, I think it's code 453, if I'm not mistaken, IRS code 453 installment sales. You can have somebody talk to you about that and show you how you can defer your taxes, get less of a hit on a property in terms of taxes, because you're selling it on installment sale as opposed to just selling it outright, and you're getting all of that equity in one shot. That's going to get taxed a lot of times with capital gains. So this is another investment strategy that you could look at, because even though you sell it at a certain price, you only can get taxed on the money that you actually receive from the sale, the down payment, things of that nature. And then each year, you'd have to look at how you can possibly reduce your taxes based on that income that's coming in. But I'm not giving tax advice or anything like that, and I'm not an accountant or anything like that. But I would ask somebody, I would have your um, financial person or whoever, explain to you the benefits, and show you on paper, like, what's the difference here if I go ahead and sell this and make this amount of money, and what I want to pay taxes on, as opposed to if I do it this way, what is it looking at? What is my tax burden, if I do it with seller financing? So, and then I mentioned this earlier, you can leverage a property by essentially what they call it is a wrap, seller financing wrap. And that's when you have a mortgage on a property. There's still a mortgage on a property, and whatever that may be, it could be a low balance, medium balance, high balance. But what you're doing is creating another seller finance note to wrap around that first one, and then you can make the money, make a spread there between what's already in place, what you got when you purchased the house, and then what you can offer in terms of seller financing to the buyer that's moving in, and there could be a difference there. So, um, that leverage, again, that's another investment strategy. You can leverage a property. Maybe there is a property that that you own somewhere that has a mortgage on it, but you can turn it into a better cash flowing asset for yourself, and increase the money that's coming in for you, your income. So these are the reasons why, um primarily why you want to consider seller financing if you're a seller. I think it's important now to get people to start thinking about this. The market, may change. There's a lot of things going on right now. Like I said, the interest rates and stuff like that, we're kind of moving around. We're starting to see properties stay on the market a little bit longer. We're seeing more listings come on the market. People are looking to sell, even though we're kind of going into a fall and winter season. So I think that this particular market is shifting, and there's going to be people that can take advantage of seller financing based on their situation, whatever that may be. And like I said, if you're not somebody that has to get all of your proceeds today when you sell this house to then, go do something with it, you should at least want to look into, the, what is my financial picture look like if I sell or finance this house, or if I just sell it outright. You want to at least consider it, give it a look, weigh the pros and cons of it, and then make the best decision for yourself. So that's what I wanted to go through really quickly for today. I wanted to get this video up and just give sellers a basic understanding of what they could do with their property and why they want to do it. And then I'm going to do part 2 of this before the end of the week, and then we're going to go through like 3 examples of how the seller can then cash in on the note that they created. You could either do it over time, you can do it maybe in a shorter amount of time, or you can do it as soon as the note is created in a relatively quick time. You can get yourself cashed out. So we're going to go through those 3 scenarios on part 2 of this. So if anybody has any questions, my contact number is 973-475-8488. You can shoot me an email at investorgmr@yahoo.com. And, if you have any questions based on this, maybe something wasn't clear, please let me know, and we'll get that answer for you. But, that's why I wanted to make this video, is why sellers should consider seller financing. Have a good one. Talk to you soon.